Who's coming in for a landing now? Who's going to be our next great presenter?
We've got Mr. Stephen Primo, one of our favorites. We've missed him very much. Got to meet his wife. She's lovely also. So he is here with Pro Trader Strategies, and he's been trading the markets for over 37 years. He's been featured in Stocks and Commodities magazine, and he's a frequent contributor to many sites such as Trading Markets, FX Street, Forex Pros, Traders Expo. His strategies are now traded across the globe in over 50 countries on 6 continents.
Wow.
That's pretty awesome. He's going to be talking today about how to leverage volatility in today's markets, 2 rules of his most consistent trading strategy, how they can be applied to any market at any time frame, and how he uses these rules in his own personal trading. So, see if we've got Stephen.
Hello, everyone. Hi, Raleigh. Hi, Pat. Nikki. How are you?
Hi, doing wonderful.
We're doing great, Stephen. It's good to hear your voice, buddy.
Great to see you. I guess everything's coming through loud and clear. You can see all right?
We sure can.
Okay, I guess I'll begin then. Thanks, everyone, for being here today, and thanks for Westmark for inviting me to speak once again. I'm going to be talking about presidential profits and leveraging the election cycle. And the reason why we're going to be discussing this today, and especially with the strategy rules I'm going to be giving you, is because of the increased volatility. I'm sure you've all seen it in the last, not even the last month, but the last couple of weeks. For example, as we look at this chart here, this is the chart of the spiders coming into the election, coming into the very beginning of November. The market was fairly strong and going down. And then all of a sudden, right when the election started, it went straight up. So there's a lot of volatility here. And this troubles a lot of traders because their strategies are really not built for this type of movement or momentum. A lot of traders like to trade overbought, oversold situations, but as you can see, markets will continue to go lower and lower, and then all of a sudden, just when you get stopped out, they'll go straight up, and then you'll short them, and they'll keep going higher and higher. So it's really difficult to trade these volatile markets. So what I'm going to be sharing with you today are 2 trading rules that can help you become a very consistent trader, because these rules are perfect for the strategy that we're going to be sharing with you to trade these volatile markets. For example, as we look at this older chart in Tesla right here, most traders would look at this and say, well, I wanted to buy this, but you know what? It's overbought now. So it's gone up way too far, too fast. So now instead of buying it, I think I should probably sell it, because at least if I want to buy it, it'll come back down here. So I'll make money on the way down. So let's say most traders would decide to short this or maybe buy the puts. And then this happens, right? Look familiar? This is what happens in these volatile markets. It's very difficult to figure out when a top or a bottom is taking place, because oftentimes they'll just keep going in that same direction. So with the 2 rules I'm going to be sharing with you with the strategy today, you actually, instead of a sell signal on that very same bar, you would have generated a buy signal. And so instead of selling and taking a loss, you could have potentially captured 115 points in the next couple of weeks trading Tesla. So you're going to get all this information today. And on top of that, you're going to see how easy it is to execute these trades and to find out where these buy and sell signals are on the PTS Primo charting platform. I developed this platform with Pro Trader Strategies. It's an educational platform that actually teaches you how to trade. So welcome once again. My name is Stephen Primo, president and founder of Specialist Trading. About 12 years ago, I teamed up with Pro Trader Strategies with just one goal in mind, and that was just simply to educate traders around the world. You see, we feel, it's our philosophy, that the reason why most traders fail, and it's been estimated that upwards of 85% of all traders fail, not because you have a bad system or a bad methodology, not because you don't have enough experience, not because of the market you're trading, but it's really because you're giving your power away. Most traders, myself included, when I first started trading, made their trading decision this way. And think of it, ask yourself if you do the same thing. You go to a chat room, or you'll find out what the earnings are going to be. You'll wait till the earnings announcement comes out, of the jobless claims, or you'll wait to listen to that so-called trading guru on TV to find out what he likes or doesn't like. You see, this is the way most traders trade. And most traders will say, well, Steve, I haven't been trading as long as you have. Trust me, I don't have enough experience. I don't have enough capital. And I just don't have the knowledge. I don't have a degree in economics. Well, trust me, I don't have any of those things either. And when I first started trading, I was as green as anyone else. I didn't even know what a stock was. But most traders feel they need these things in order to make a decision. So rather than take the time to educate themselves and to put the their own trading destiny in their own hands, they'd rather lay it off to someone else and say, why don't you make the decision for me? And that would be almost similar to an airline pilot in the middle of the flight asking the passengers, well, how do you think I should land this? What do you think I should do? Or a brain surgeon asking everyone, in the operating room, how do you think I should operate on this patient today? You think it's silly, right? But unfortunately, this is the way most traders trade. They'll go to a chat room or a trading room to find out what they should do. They'll wait for someone on TV to tell them what to do or wait for some news event. And that really is a recipe for disaster. So I developed Pro Trader Strategies myself, developed all these strategies and techniques that I've accumulated in my over actually 43 years of trading so that you can educate yourself and for the very first time be in charge of your own trading destiny. This, in my opinion, is the only way one can become a consistent trader. And you'll see the attention to detail I give in today's class. But before we begin, as always, we're first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results and a lot of current examples using this particular method. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, if you haven't done so already, I see we have a good crowd here today. If you'd like to get some more education on a daily basis, I invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different educational information, anywhere from signals our strategies have generated to little bits of financial wisdom I've accumulated along the way. So lots of great free daily education. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. So we're never going to tell our students around the world how to trade or what the perfect time frame is or the perfect market or what you should be buying and selling. Remember, that, in my opinion, would be doing you a disservice. I would be taking you out of the game. You see, a good mentor does not trade for his students. He teaches them how to trade. So that's our goal, to teach all of our students around the world and in every state in the United States how to trade with the same specialist edge. Now, this is the same edge that I was taught on the trading floor when I first started my career some 43 years ago on the Pacific Stock Exchange, and what has sustained me for that amount of time. So hopefully it will be able to do the same for you. Now, in today's class, we have a good crowd here today. I want you to ask me as many questions as possible, but like the last guest, I think I'll take them at the very end of the class, okay? So oftentimes if you have a question, if you just wait for the very next slide, the question will be answered. So please, if you have a question, kindly wait till the end of the class. I have a lot of slides here to share with you, and I just want to make sure that you're going to be able to see the entire presentation, okay? I don't want to take anyone else's time. Okay, with that said, let us begin today's educational class. And what I want to talk to you about today is one of our most consistent strategies. It's one of the first ones I learned from my mentors. It's strategy 3A. Okay, so what exactly is this method? What are some of the highlights? It's a continuation strategy. Now, if you're not sure what a continuation method is, a continuation method looks for an established trend. It looks for like a straight up move or a straight down move, and then it waits for some type of pause. Now, that pause is where we define whether it's going to continue going higher or lower. And if it's going to go higher, according to our parameters, we jump on board and we take the continuation of the trend. Now, the way we do that is by using a unique Bollinger Band setting. I guess you didn't think you were going to get two webinars today or two classes today in Bollinger Bands. Well, we're going to be using the Bollinger Bands because they're going to be telling us whether this is a valid signal or not. Now, this strategy is designed to trade these quick, powerful trends that we've been seeing as of late. The beauty of strategy 3A is that you can apply it to any market, any time frame, in any direction. Now, a quick story. When I first started teaching this method, we mainly used it because the volatility wasn't as strong in the markets as we see today. So we mainly applied it for E-mini trading because that's where you get these nice intraday swings. But a lot of our students all of a sudden started applying it to the currency pairs. They started applying it to stocks, to Bitcoin, to commodities. And we had all these testimonials telling us that it works great in any market or time frame. So that's the beauty of this. It doesn't matter if you don't trade stocks, if you only trade futures, if you trade Bitcoin, it makes no difference. You can apply this to any market. Now, with all of our methods, we always tell our students, regardless of how long you've been trading, to please paper trade first, okay? You're going to get the introductory rules to this method today, but I don't want you to jump in and start trading it as soon as I finish today's presentation. I want you to paper trade it first because I can almost guarantee you that if you jump in too quickly, you'll lose money. Not because it's not working properly, but because you implemented the rules incorrectly. So please paper trade first. Our edge at specialist trading is consistency. I know a lot of you think consistency means, well, gosh, that means that almost every trade is a winner, right? No, we don't believe in that. We know that professional traders have losses all the time. But a consistent method is one that's able to recoup those losses, often on the very next trade. So you see some examples of this. All of our methods are highly consistent, okay? All right, so let's start out by giving you a brief refresher course in the Bollinger Bands, all right? There are 3 bands, a top, a middle, and a bottom band. The middle is just a moving average. That's all it is. It's the 20-period simple moving average. The top and lower band are separated by what they call the upper and lower deviation. Now, don't ask me to go into that. I personally don't even understand it myself. It's a great tool. It's a great indicator, but I'm not that savvy enough to figure out the inner workings. But the deviation is set usually on just about every charting software package, a +2 and a -2. This is just referring to the distance the upper and the lower band are from the middle 20-period moving average. So as we look here at this generic chart, here are the standard setting. That's the middle line. That's a 20-period moving average. That's the top band and the lower band, okay? Now, we're going to change things a bit for strategy 3A. Now, here's the proprietary rules. These are usually reserved for the students and the members of this course. We're going to give them away to you for free. Now, I believe this is being recorded, this presentation, so don't worry if I go too fast and you say, Steve, I didn't get that. Gosh, can you go back and over again? Because I'm sure you can look at this recording at your own leisure and you'll be able to watch it over and over again and copy down the rules. But here are the proprietary settings. We're going to leave the middle moving, or I should say the middle band, which is the 20-period moving average, the same. We're not going to touch it at all. The only thing we're changing are the upper and the lower band deviation. We're going down to fractions. So where they were set at +2 and -2, now we're going down to +0.382 and -0.382, okay? Now, don't ask me why they're set at these numbers. I know a lot of you will say, oh, it's a Fibonacci type strategy. Well, these are the numbers that my mentors gave me for the strategy some 4 decades ago. So I've just continued to use them. I've experimented with them in different settings. And trust me, over time, these will get you the best results. So feel free to experiment if you'd like to, but let's see what they look like. So here is the standard Bollinger Band setting. And then once we use the proprietary setting, here's what it looks like. Do you see the change? Do you see how we now have this kind of smooth, kind of like a river flowing? That's going to help us determine these setups for strategy 3A. All right, so let's go over the rules once again. I'm going to take it slowly. If it doesn't make sense, please remember that I have a lot of slides and it'll make a lot more sense once we look at the slides and get a better idea how they look visually. All right, step 1. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. All right, so here we are, that chart of Tesla we looked at earlier. All we have to do on our platform, we've made it simple, is first of all, this is the one that you thought was overbought, right? Well, all you have to do is click on Strategy 3A in the upper platform strategy tab right here. And when you click on Strategy 3A, click on Indicator, and all of a sudden you'll see the Bollinger Bands automatically appear. So there's nothing you have to edit. There's nothing you have to change. They're automatically there for you on our platform. Now, if whatever platform you're using, you can edit them yourself. You just have to go into the edit box and make sure they fit the requirements. But remember that you have to use Bollinger Bands. I know a lot of students have said, Steve, can I use this with moving average envelopes, or can I use this with Keltner channels? No, Bollinger Bands will give you the best results for this strategy, okay? All right, let's go on to step number 2. We want to look for 5 consecutive price bars that close either on or above that highest Bollinger Band. Okay, so as we look at the Bollinger Bands here, we see we're below originally, and all of a sudden we start to move above, and we want to see 5 consecutive closes above, as we see here, okay? And remember, the first bar opened lower and then crossed up above. It does not matter if it intersects or touches. It just has to close above, all right? So we have 5 consecutive closes above. Now, here's our entry. We're going to enter to buy when price trades 1 tick above bar number 5. Now, you notice I said trades. I didn't say it has to close above there. It only has to trade there, intra-bar. So as we look at bar number 5 here, this is where we're going to be buying, right here. Now, as we see on the very next bar, we didn't trade there. So most students, if they didn't study this correctly, will say, oh, okay, so I guess this is not a valid setup. I'll look for another one. No, remember, you can sit and wait however long you'd like The only thing we suggest is if you see price come all the way down here and start to hover around these Bollinger Bands again without trading above, then we would suggest negating the trade. But unless it does that and closes within here, you can still wait a couple of days, maybe a week if you like. Now, a day later, look what happened. It did trade there. And luckily it closed above. So on the day you have a nice little profit, but you entered. And then potentially you could have captured 115 points. See how simple this is? You didn't have to look at any news. You didn't have to look at any earnings. You didn't have to go to a chat room and listen to what some so-called guru was doing. You didn't have to, wait for the, the jobless claims. Trust me, I've been trading for 43 years now. I stopped looking at those things 4 decades ago. So I'm not saying you have to do that. I would never tell anyone how they have to trade, but it's not required. It's not required at all to be consistent. All right, let's look at the sell rules. I'll go through them quickly because I want to show you a lot of slides, and they're just the same rules turned upside down. Obviously, we want to plot the proprietary Bollinger Bands. So here's a chart of Roku, an older chart of Roku, okay? All right, so we're going down like this. One would say, hey, this is major support, right? We got to buy. This is where all the institutions are buying, and this is major Fibonacci support. This is that $10,000 class I took, so I've got to be a buyer here too. Looks like a reversal, in fact. Well, let's see what is the market telling us. Remember, we only take our cue from the market. We don't listen to these outside sources. Remember, that's how most traders fail. We want to just take our cue from the source. That's what we're trading. And what is the source telling us? Well, we apply the Bollinger Bands. Click on Strategy 3A. In the drop-down menu, click on the indicator, and it's already pre-formatted. So where are we in relation to that? We're obviously below, which takes us to step number 2. We want to find 5 consecutive price bars that now are closing either on or below that lowest Bollinger Band. So as we see, we were originally above, we reversed, now we have 1, 2, 3, 4, 5. Okay, so now we have 5 bars below. So according to this, it's not telling us it wants to go higher. There's no support, there's no major institutions buying, or if there are, most likely you're going to be wrong. So we want to enter to sell when price trades 1 tick below bar number 5. Remember, it does not have to close there, only has to trade. So as we can see, it took a couple of days, but on the 3rd day, it finally did trade there. And look, it traded and then closed higher. This is where most students make the mistake to say, hey, I've got a loss on the day. I thought this was supposed to work. The minute I sell, it's supposed to go straight down. Well, it doesn't always work like that. You have to wait a couple of days, maybe sometimes. Maybe sometimes you have to wait a week. But if you have the proper stop placement, money management, you should be okay. And look what happened. You had to wait a couple of days, but ultimately you could have potentially captured 45 points. Now, as with all trends, they often dry up and then change direction. As we see here, look what happened. All of a sudden, Roku started going back up. It starts oscillating within the Bollinger Band. And then what do we have here? It starts closing above. In fact, we have 5 closes above. So rather than sit and pout and say, gosh, I didn't take a profit, I should have taken 45 points and now I'm still in the trade, you have to switch and reverse because the market is telling you what it wants to do. Remember, we take our cue from the market. We don't have to listen to earnings. We don't have to listen to jobless claims. We don't have to listen to some guy on TV. The market tells you just about everything you need to know. So why overcomplicate things? So this is telling us it wants to go higher. We'll buy 1 tick above here, cover our short if we're still short, and potentially could have captured 25 points in the next 3 days. You see how simple trading is. Here's what my mentors taught me. They said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. Whether you've been trading for 40 years or 40 minutes, anyone can add more and more things onto your trading plan because we've all been taught that the more complicated a strategy or a system is, the more valid it will be, right? We've all been taught that in the beginning. But if there's one thing I've learned in over 4 decades, it's the opposite. It's when you release those things that you start to become consistent. So they said it's the most, it's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify. But once you simplify your trading, that's when you'll get on that road to consistency. Okay, so let's look at some more current examples. Those were older examples just to have you understand the process. Let's look at some current Strategy 3A examples, okay? Here's one in ADP in the beginning of October coming into this month in November. Someone looking at this would say, well, Steve, I'm a candlestick trader and this is a bearish engulfing pattern. I mean, that's one of the most bearish patterns you see. It's a reversal. So I'm going to be shorting this, even though the next day it kind of went up. That's okay. I'm going to short. I've got a nice price here and short on the close. All right, remember, we have nothing against candlesticks. In fact, some of our strategies employ candlesticks, but in a different way. What is the market telling us? Not an outside source that based on traditional wisdom that really doesn't show a lot of consistency. What is the market telling us? Well, we apply the indicator. Strategy 3A, click on indicator in the drop-down menu, and it's pre-formatted. And so what it's telling us is that we have 5 closes above. So this is in no way telling us it wants to go lower. It's telling us that most likely, if we trade above bar number 5, it's going to go higher. So that's our entry point right there. It just has to trade there. On the very next day, you would have entered. And in the next couple of weeks coming into November, 18 points potentially you could have captured. Okay? See how simple that is. Trading is simple. It's the trader who makes it more complicated than it has to be. All right, let's look at run, R-U-N. Once again, most traders would look at this, myself included, when I first started trading. I'm not trying to be condescending because I did the exact same thing. I would look at this and say, hey, this is major support. This is where the institutions used to give me orders in my book when I was on the floor. So I can't go against the institutions, right? They're always right. They have all the big bucks, and so they have to be right. And so why would I bet against them? Well, just a little point of fact, I'm here to tell you that after trading with the institutions for years on the floor, they used to enter orders in my book. They had some of the worst statistics of being right that I've ever traded with anyone. So it took me a couple of years to realize that these guys knew no more than anyone else. So I would never follow the institutions now. So why would you, just because you took some $10,000 program that tells you the institutions are buying, why would you want to buy? What is the market telling you? Not some outside source. Well, we click on strategy 3A, click on indicator, and price is below that lower Bollinger Band. In fact, there's 5 bars below. So we have a setup to go short. RUN is telling us that most likely it wants to go down. It's not guaranteed, but it wants to. It's setting up for that. So we'll go short, but only if it confirms trading below bar number 5. And we go short. Either you can buy the puts or whatever you want to do. We're not here, we're an educational company. We're not saying this is a system that the only way you can trade this is with puts or calls or with some spread, or the only way you can do this is by buying or shorting the stock. It's up to you how you want to enter. Our job as an educator is to just teach you the format so that you can spot these high probability setups. It's like if you were learning to play golf, it's not my job to sell you some golf clubs. I'm just teaching you how to play. However you decide to play golf with the clubs or whatever, it's up to you which ones you want to purchase. Same thing with how you want to enter. So you would have gone short right here in some way and potentially captured 12 points coming into November. Once again, see how simple this process is. All right, another example in BMI. Okay, 5 bars above. Here's our entry point. Now, as you can see, it just closed. We had 1, 2, 3, 4, 5. It just traded above there, but look where the close was. This is where students always say, hey, Steve, I've got a loss here. Why am I in this thing? Remember, this is about consistency. Sure, if you wanted to get out, you're more than welcome to, but in the course, we teach upwards of 7 different stop placements, and most likely you'd still be in this trade. And that would have been a good choice because look what happened. 19 points potentially you could have made coming into October, okay? Here's an example on GILD. This is a weekly chart, just to show you that nothing changes because we're looking at a different time frame. The same exact process. We have 1, 2, 3, 4, 5 weeks below. I know most students would say, Steve, I can't short this. The stock was trading in the mid to high 70s, and now it's in the mid 60s, 10 points. I can't go short now. I would have wanted to go short up here. Well, remember, this is not a system where everyone has to take the trade in order to get results. It's up to you. We're just educators teaching you high probability setups. But had you taken this trade, well, potentially you could have captured an extra 9 points. Now, a lot of our students like to use this on positions they have. Let's say positions in your IRA or something. Let's say you were long GILD, Gilead, and you said to yourself, boy, there's a sell setup here. Maybe I want to exit this and I'll get back in later. Well, you could have done that and saved yourself a good 9 points. Let's look at Snap, okay? Same process. We have 1, 2, 3, 4, 5 closes above. You would have entered, and look what happened. The next 2 days, you've got a loss. But if you used one of our generic stops, you'd still be in. And coming into November, you've got a nice 21-point gain. Now, remember, in the class, we teach you where to enter, 7 different ways to enter. I'm just sharing with you one of the most generic ways. We teach 6 or 7 different stop placements and 6 or 7 different exit levels. So it's up to you to decide how you want to apply all of these. Some of our students would enter this trade and say, you know what, I have a couple point profit, I'm getting out and moving on to the next one. Or someone else would say, you know what, I took 10 points, I said, thank you very much, and I'm out. Still, someone else could still be in this trade and say, wow, why would I want to get out? This is going to go up much higher according to the stop or the exit point I'm using. So which one is better than the other? None of them. You see, our goal as an educator is to have you decide the method and the placement that makes you feel the most comfortable. You see, you will never be consistent. You will never be a consistent trader if you blindly follow someone else's rules on how to enter, how to exit. You have to be given this kind of a smorgasbord or this kind of buffet table of different options and variables, and then you have to decide. Just the way you would go out to a buffet dinner. Not everyone's going to choose the same entree. Not everyone's going to choose the same dessert or the same drink. But you're still going to get a meal. It's still going to be a pleasurable experience. It's the same way with trading. The only way you will be consistent is by making your own trading decisions. Our job as a mentor is to provide you with enough variables to help you make those decisions. All right, let's look at DKNG, DraftKings. Once again, 5 closes below. You could have gone short right here in the middle of October, 12 points to the downside, okay? Let's look at LOGI, Logitech, okay? Same thing, 5 closes above. We place our entry right there, and it took a little while, but ultimately coming into end of October, beginning of November, 22 points you could have potentially taken advantage of. As we look at VIR, okay? Biotech, 1, 2, 3, 4, 5 closes below. This is where we want to enter. We could have entered on the very next bar, 13 points. Now this was going back to September because it took us a while to find some sell signals because there weren't a lot as of late. All right, let's look at Duncan, all right? Here's a great example. Most traders would say, gosh, you know, it's taken off already. I'm thinking about selling it. Well, remember, the market is telling you it wants to go higher. You could have entered right here around 81, 82. Ultimately, 23 points coming into November. You see, the market, as I've continually said today, the market tells you just about everything you need to know. There really is no reason to listen to anything else. All right, let's look at DAO. Switch the coin. We're looking at the downside now. 1, 2, 3, 4, 5 closes. There's our entry point right there. You go short, 14 points. This was once again an older chart coming into September because there aren't a lot of stocks that have been going down lately. But when they do, trust me, you'll want to take advantage of this. All right, let's look at the process of how you could implement this using our platform, okay? If you became a student of this course, this is how simple it is. Because remember, we constructed this, Pro Trader Strategies and myself, we developed it with one sole purpose, to make trading simple. Trading doesn't have to be complicated. So someone looking at this, myself included when I first started trading, would say, hey, that's oversold, right? I mean, you got to buy this. So it's tremendously oversold. Looks like we made a little bottom there. But here's how simple it is on the platform. Click on Strategy 3A, click on the indicator, and you have the pre-formatted, already assigned Bollinger Band proprietary settings. So there's nothing you have to do and go in and edit every time. It's already there for it. And you think to yourself, you go, wow, I thought this was a buy setup, but look at this. We have 5 closes here. 1, 2, 3, 4, 5 closes below. So what's the market telling me? It's telling me actually it wants to go lower. If it trades below, I should go short. Now, if it continues to go higher, well, then all bets are off. But I think I should go short right below here. So in order to check your work, because we teach you all the rules in this, in order to check your work, once again, the educational platform takes care of that. Click on Strategy 3A again. Click on Signal Arrows, and this will tell you if you properly identified a valid signal. And right there, there is a down red arrow. So you're right. That is a valid setup. So if you wanted to take that, it's up to you. That's where you're going to be entering short. And plus that also, that little dotted line is available on the platform as well to tell you where your entry point would be. You could have entered on the very next bar. This is in Quidel Corporation. 110 points, okay, in the next 3 to 4 weeks. Not a bad little trade, right? Now, what happened after that? Well, the market decided to change direction. So rather than say, okay, well, I guess I don't know what to do here. No, the market's telling you, Now it wants to go higher because what do we have? 5 closes above. 1, 2, 3, 4, 5. So if it trades there, that's a valid signal, right? Check your work again. Click on signal arrows. And yes, you are properly identifying valid signals. See, for the very first time, you are taking charge of your own trading destiny. No one's telling you that what you should buy. No one's telling you what you should sell. No one's telling you what the earnings are going to be. You don't have to really look at that if you don't want to. I stopped looking at that 4 decades ago. So there's no reason to. Why not just learn how to listen to the market? It's a lot simpler and a lot cheaper too. You don't have to waste so much time and energy and money searching for that holy grail. So you want to enter right here, 1 or 2 ticks above. You could have entered 2 days later and potentially captured 85 points. So potentially you could have captured close to 200 points just using strategy 3A on QDEL, okay? See how simple this is? Now, a lot of students say, well, Steve, 200 points. That's if I got in and got out at the very bottom and got in and got out at the top. I mean, nobody does that. Well, you're right. Let's say you only captured half of that. No, let's take it a step further. Let's say you only captured a third of that, okay? That's still 65, 66 points. Don't you think, what would if I told you, hey, next month, would you like to make 66 points? Sure, that's a tremendous amount. So you don't have to get in and out at the very bottom or top. There's a lot of room to potentially capture profits. Let's look at this last setup in stocks here, CACC, okay? Credit Acceptance Corporation. Once again, the way I used to trade, I'd look at this and say, well, this is the institutional buyers. You can't go against the institutions, right? They know what they're doing, right? Well, I learned the hard way. But check to see what the market is telling me. And we have 5 bars below. So the market's telling me that if we continue to go higher, well, then all bets are off. But if not, I should be going short right here. So I check my work to see if I'm properly identifying it. Click on 3A, click on signals, and I'm right. That's a valid signal. Now, I don't just want to sell at the market. I want to enter right here. Took me a day or two to enter, but I finally got in. 175 points, okay? Potentially you could have captured. So this was all done without earnings, all done without having to find out what somebody is saying, telling you what to do nightly on TV, all without looking at the jobless claims, all without looking at volume with a ton of indicators, overbought, oversold, using one indicator and listening to the market. Now let's just go over some Forex, E-mini, and commodity examples because we know not everyone just trades stocks. These are older examples for educational purposes only. A 4-hour chart of the British pound. The same process, nothing changes. You could have entered here, potentially captured 315 points, okay? And when the trend changed, you just switch, enter right here, and potentially captured 390 pips, okay? I mean, we're talking about close to $7,000 per unit. That's a 4-hour chart of the British pound. How about a 10-minute chart of the E-mini? Now, we were originally below, so it looked like we were going to go short. You had 5 closes below. Here's bar number 5, right? This is where you would have gone short, but then the market changed its mind. You see how the market tells you what it wants to do? So you never would have had to go short. And when the market decided to go up, now we have 5 closes above. So now we change our mind with the market. You see, our job as a trader is not to figure out how high it's going to go, not to figure out the earnings. It's not to figure out what the news event is going to be. Our job is just to listen to the market and then jump on board when we find out what it wants to do. That's it. You don't have to overcomplicate it. So right now, we listen to it and it's telling us that most likely it wants to go higher. So that's where we'll buy. And had we entered there, potentially we could have captured 52 points in the next 4 or 5 hours. All right, that's about $2,600 per contract if you held on. Lastly, here's a weekly chart of crude oil. The same process, just because we're looking at commodities, just because we're looking at a different time frame, does not mean we change anything. 1, 2, 3, 4, 5 closes below. That's our entry point right here. We could have entered on the next week, and remember when crude oil was falling out of bed. All right, you didn't have to look at anything economically or look at what was going on with the world with crude oil. The market told us it wanted to go lower. All right, let's recap. Strategy 3A is a continuation strategy. Remember, we're looking for an already established trend, either up or down. We wait for a little pause, and then according to our structure, When it resumes its trend, either up or down, we simply jump on board for the continuation. That's why it's called a continuation strategy. We're buying high and selling higher. We're selling short at a low level and covering lower. Now, the way we do this is by applying the unique Bollinger Band setting. I shared that setting with you. And remember, don't worry if you didn't copy it down. It's probably on the, well, not probably, it will be on the recording, so you'll be able to get it then. Remember, this is designed to trade quick, powerful trends, so it works in perfectly with the volatility and the momentum we've been seeing as of late. The beauty of Strategy 3A, you can apply it to any market, any time frame, and any direction. Remember, when we first started teaching this method years ago, we thought it was just going to be for the E-minis because the markets were pretty dead at that time. And so the main way you capture these big trends were intraday trading, and that was in the E-minis. But now that we've seen this increased volatility, you can apply it to anything: stocks, futures, currency pairs, Bitcoin, commodities. It makes no difference. But remember, the only thing I do require is that you please paper trade this first. Once again, I can almost guarantee you will lose money if you start trading this right now in the last half hour of the day if you jump in too quickly. Remember, you have to really practice this. Think of any endeavor, any a career, any hobby. No one just jumps in. Any actor or actress, they don't just say, okay, well, let's just start filming or let's just start recording right now. They always practice or rehearse. Think of any athlete. He just doesn't say, okay, let's start playing. Let's start the game right now. No, they have a practice for months, for weeks before. It's the same with trading. You have to practice. You have to paper trade. That's how you figure out if it feels comfortable, and that's also how you'll figure out how to implement this in a lot of different scenarios. Remember, our edge is consistency. We're not going to sit here and promise you that every trade works. That's okay. That's perfectly admissible, okay? Some of the best traders in the world have 2 or 3 losses their very first trades, and then the 4th trade makes it all back. That's what consistency means, having a method that's able to recoup your losses. And all of our methods are very highly consistent. Now, ask yourself, before you ask me questions, do you think this strategy could have helped your trading this past year? Just imagine it was January 1st, 2020, right before this great year we've all experienced. Just imagine you had learned this, okay? Now, look at your results that you've had in the real world. Most likely you're nowhere near where you promised yourself, where you wanted to be at the end of 2020, okay? Do you think this could have helped you? Would you like to take your trading to the next level so you can start out 2020-21 in the right direction? Well, we have a great offer for all the people attending our presentation today and all the people in today's class. We're going to offer you Strategy 3A, the entire course. This is our premier continuation method built off using the unique Bollinger Band setting. You're going to get all the proprietary entries, all of the exits, all of the stop placements, okay? You're going to get the complete course rules. So you'll know how to implement it in a number of different ways and then pick the best way that works for you. Along with this, you're going to get educational correspondence. You'll get my personal email. You can contact me whenever you'd like if you have a question. In fact, I was answering emails today from students around the world, just wanting me to check their work, wanting me to look over trades to see if they were in line. And that's how you can feel comfortable that you're in line. Now, we also are going to take it up a notch. This was a continuation method. Remember, I described to you a continuation method is one that already finds an established trend. So you're going to be actually buying at a high level and then selling higher. A lot of students have difficulty with that. They say to themselves, I just don't feel comfortable. The stock's gone up 10 points or the future's gone up 10 points and then I'm going to buy there. So because of that reason, we're going to throw in an absolutely different strategy based on different parameters that will buy at lower levels and sell at higher levels. This is strategy number 1. This is our most consistent pullback method. Now, if you're not familiar with what a pullback method is, it looks for an overall uptrend, but it waits for price to sell off so that you can buy at very inexpensive prices. A lot of traders feel more comfortable buying and trading pullback methods. The same way with shorting. Rather than having the market go down 10 points and then saying, okay, well, I'm going to sell right here, they feel very uncomfortable, like they're selling at the bottom. Well, here's a perfect method for that. Strategy number 1 looks for an overall downtrend and then waits for that bounce. On that bounce, if all the rules and requirements are met, it will generate a sell signal, often at the very top. So this is a great, entirely different course based on entirely different parameters. We're also going to throw this in with educational correspondence also. You're going to get all the Strategy 1 rules, you're going to get an aggressive as well as a conservative version. And remember, you can apply this to any market, any time frame as well. Once again, when we first started teaching this, we were just using this for stocks. But our students have told us, hey, Steve, this works on E-minis, currency pairs, futures, so it makes absolutely no difference. Here's an example. Here's an older chart of the spiders. Now, most traders looking at this chart would say, hey, well, we had support right here, and then we broke it. We have a bearish engulfing pattern. Look at all the down closing days. This is a downtrend, right? So I'm not going to buy anything. In fact, I'm going to look for a little bounce here to go short. Well, here's the beauty of strategy number one. According to the proprietary requirements, where everyone else thought it was a downtrend, it was actually a strategy number one buy signal. So strategy number one generated a buy signal in the spiders. That's the ETF that represents the S&P 500. And in the next week, the stock gained 8 points. I know 8 points doesn't seem like a lot in today's markets, but remember, this is a $200, $300 stock. And a lot of our students like to apply this with ETFs, with indices. So in other words, if the indice generates a buy or sell signal, well, then you can apply that to the market, because 8 points in the spiders represented between 600 and 700 points in the Dow. So you could have used this as a market timing tool as well. It's another great strategy. We're throwing that in. But we're not stopping there. We're also going to throw in, along with strategy 3A and along with strategy number one, 7 extra bonuses, okay? These are our extra bonuses for today's conference. Bonus number one, you're going to get the add-ons for strategy number one and 3A. So if you want to use your own platforms such as TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, you can get the up and down arrows to have generated so you know when there's a valid signal being generated, okay? Bonus number two, you're going to get our full Secrets of a Stock Exchange Specialist course. Years ago, I was asked to be the head speaker at a conference in Denver, Colorado, where I spoke in front of a crowd, and they recorded the video. So this is the 3-hour presentation of that, where I went over many other techniques and edges. Bonus number three, this is the PDF version of my book. I wrote a book about my experiences on the trading floor of the stock exchange. In fact, this book really details, it almost has a trade-by-trade account of what it was like to trade during the crash of '87. You're going to get this PDF version. This is a $99 value. Bonus number four, 6 months of our PTS Primo charting platform. I'll come back to that because that's a really great bonus. Bonus number five, this is the Secrets 2.0 course. This is where we take Secrets course up a notch, where we give you many more edges and techniques and different ways to trade, and they're more advanced, so you can take your trading up to the next level. Now, bonus number 6 and bonus number 7 are scanners. You can get the individual scanner to scan for an individual stock, or the multi-scanner. You can scan for individual or multiple strategies or techniques all at once to give you a better idea of what's being generated on a nightly basis. Now, let me just go over bonus number 4, because I think this is worth its weight in gold, okay? You're going to get 6 months of our platform. Now, most people would say, okay, well, you know, Steve, I'm happy with TradeStation or Metastock. You know, I have pretty much the same indicators, and I'd rather just use your add-ons and get the up and down arrows. But with our PTS Primo charting platform, you're getting over 4 decades of techniques, methods, and strategies that I've accumulated. And it's all one click away. You won't find any of these on any other platform. For example, the PTS Primo charting platform really teaches you how to trade with all these different accessories. You're going to get strategy 3A and number 1. And remember, everything is pre-formatted, so you won't have to pre-format the Bollinger Bands or the indicators for strategy 1. But you're also going to get a strength of trend tool. Now, this is something you won't find anywhere else. It's a tool I developed with Pro Trader Strategies that has a unique ability to find out when a trend is running out of gas or out of steam. And wouldn't you like to know that in a strong uptrend market or a strong downtrend market? It called tremendously close to the bottom of the Corona crash down in March and April, that the market most likely was getting ready to turn around. This is a great tool that you only find on the platform. You're going to get that with the 6 months of the extra bonus. You're also going to get our enhanced buy-sell line. These are 4 different features that tell you the overall trend. It's a great format. We call this our buy or sell line because it really tells you whether you should be buying or selling. So you can apply this with any strategy or any technique you have. And if you get a buy signal, it should be confirmed with this buy-sell line. You will increase your odds for consistency. You'll also get our top-bottom 25% tool. This is based off pattern recognition, which defines the short-term trend. So when you combine this with the overall trend, the buy-sell line, you really have this added consistency. You also get auto-generated exit levels. Now, one of the exit methods we teach you in the course is on our platform. And this will automatically generate these exit levels for you. So you'll know exactly where these levels are to get out. This all comes with personalized tech support. So if you ever have any issues loading up a chart, watching a video, or getting one of our strategies online, we'll be right there in a matter of moments to rectify the issue for you. So this is a great, great offer, okay? This is the trading educational platform you've been searching for. I developed this with Pro Trader Strategies to make trading simple. Everything is one click away. Okay, so let's break this down, our presidential profits discount, all right? All right, remember, this comes with 6 months free of the platform, Strategies 3A and Strategy 1, all right? You're getting the platform and all the extra bonuses, the 7 bonuses included with that. Now, normally, if you purchase this, it would cost you over $7,200, close to $7,300. But for a limited time, we're discounting that. We're discounting it down by nearly $7,000, down to $297. Less than $300, you're going to get over 4 decades of information right there at your fingertips, okay? And you'll also get my personal email address where you can contact me as your personal mentor whenever you like. So this is a great, great offer. We've had this offer a couple of times before, and it's really turned some students' lives around. And as I often state, a year from today, you will have wished you became a member of these courses. So please take advantage of this deep, deep discount. Remember, $300, you really can't, I would venture to say that most traders in today's room probably lost that more than that this past month, okay, with today's difficult markets. But for $300, you're getting over 4 decades of information I've accumulated to help take your trading to the next level, along with 6 months of our platform. And remember, the strategies are yours to keep. They're not something that expire in 6 months. You'll get all the rules, you'll have the online course, and you'll have the educational correspondence with yours truly. So you can always contact me whenever you like. This is a great, great offer. Here's how to take advantage of it. Contact Pro Trader Strategies. They're my sister site. I developed the platform with them, and they're in charge of all the pricing and discounts and tech support. I would, if you're interested at all, I would really suggest calling them directly at area code 310-598-6677. They have trained consultants manning the phones right now. They would be more than happy to answer any question. There's absolutely no obligation. They're not going to try and sell you anything. They'll answer any questions you have. And if there's a wait, just simply wait, because they'd love to answer questions. That link you see at the very bottom is the link that will take you to the sign-up page, where there's more information on that for our expo. Now, if it's not a live link, but I believe they've posted that on the page, or maybe on the chat page, so you can find that there. Now, I'm going to leave this information up. I believe I'll take some questions. Just to go into the Q&A here.
Well, that's great, Steve. I've got some questions that I've been able to collect here.
Oh, great. Thank you, Rolly. That's perfect.
Yeah, no, and what a great presentation. Step by step, walking us through the strategies. That was fantastic. That was just great, Steve.
Thank you.
Appreciate that. So there was a couple of questions came up early because I think people missed it, and it's just a small point, but they were wondering, what were those settings that you used on the Bollinger Band, Steve?
Okay. The Bollinger Bands, what we're going to do, usually with any platform, when you open up or edit the Bollinger Bands, you have a setting for the middle. That's the length a lot of times, or it's called the speed. That's simply the 20-period moving average. So if you see a number there that says 20, just leave it alone.
Okay.
What we want to edit, don't confuse yourself. What we want to do is just edit the deviation. That's usually set at 2. So if you see the number 2 there, either a positive or a negative, you want to go down to 0.382, go down to a fraction, 0.382 for the upper band. And if they give you the option for the lower band, it would be negative 0.382. Now, I know some platforms only give you one option, and they'll make that the same for both upper and lower. And other platforms, give you both options. But just remember, once again, this is all pre-formatted. Before we developed the platform, I used to have to do that too on the platform I was using. And every time I wanted to use this, I had to go pre-format that and make sure I had it right. And, in the heat of a trade, oftentimes that's the last thing you want to do. So the beauty of the platform is it's right there for you.
Absolutely. And so as we get into the course just a little bit, number of people brought up questions, which is like, this is, fantastic offer there. So from your standpoint, somebody walking into the course, what do you find is the average learning curve as somebody absorbs this information, paper trades, and gets ready to place their first live trades? Do you have a sense of that, Stephen?
Yeah, I would say a minimum of a couple of weeks. I know some people take a little longer. People that have been trading for a while, they'll get it in a couple of hours, but I would say at least a couple of weeks, because we really can't stress how important it is to paper trade. Even if you think you have it down and after a couple of days, I've seen students swear they know the rules, and then they'll lose money and they'll say, Steve, this doesn't work. My last 5 trades are all losers. I'll ask them to send me the snapshots, and they're implementing the rules incorrectly, either the wrong settings or they use the wrong count. So we always ask you to paper trade. The beauty of this is that you can always email me with questions. And I think that's kind of the standard. I want students of mine to ask me as many questions as possible once you become a student of mine. So sometimes I get like 6 or 7 questions in a day. And students would always say, well, when do I have to stop paper trading? I say, the standard answer is when you stop asking questions, because that's a way of you knowing that you know all the answers now. So that's going to be different for everybody. Some people stop asking questions after 3 days, some after a couple of months.
So, to that point, and if we think about the platform that you've got, there was a couple of questions that were there. With the 6-month access to the platform, does that include data feeds, or are data feeds a different fee on top of that?
Yeah, that does include a data feed. I believe it's a end of day data feed, but there are different options you can have. That would be a question better for Pro Trader Strategies, because they're in charge of all of the tech support and pricing. But there shouldn't be a problem with that at all. I mean, there are different levels you can take it with.
That would make sense, Steve. I mean, that's I think the way it is across the board. So if somebody were like day trading the futures markets and they need to have live intraday data feeds, that would be something they'd have to arrange.
Right. For example, I know there are a number of, you can get live feeds if you have brokerage accounts with TD Ameritrade or some other ones as well. We can use their data for the platform, and you'll get that live market. So a lot of that, that's why I say there's a lot of different variables. So probably a better answer for Pro Trader Strategies.
Okay. And another question that was somewhat related there, does your platform, does it provide any kind of reports or metrics, for tracking performance, or is that something again?
We have an option there for students who like to, remember, we're not a systematic company, we're an educational company. And,
right.
And so our philosophy is no two traders should ever trade alike, but we do on our platform have accessibility. So once you come up with a trading plan that makes you feel comfortable by using one of our variables, you can plot the information and get results and see how well it turned out for you.
Ah, great.
But we don't have one standard. It's not a system. In other words, one trader can take a signal and he would get out with a 2-point gain. Another one would take it and get out with a 10-point gain. It's up to you how you want to implement all the different variables.
Absolutely. Well, I tell you what, that was I can't believe how much time, how the time has gone,
yeah,
Steve, and really do. You're a busy man. You work with an awful lot of people. You have huge responsibilities, and to be able to find the time to spend with us today is truly a treat for us. And I thank you very, very much for your time. And folks, I think we can all agree that was a great hour. Thank you, Steve, very, very much. I'm going to grab the screen here, and I'm going to put up
Thank you, Pat, Nikki, and Raleigh. Thank you.
Thank you.
You're so welcome, Steve. Stephen Primo, folks, with Specialist Trading, once again, over 40 years of experience there. And the offer that he shared with us is the Strategy 2-pack, which includes the strategy number 1, which is the Donchian Channel strategy, and then the one that he spent the bulk of his time on, which is the Bollinger Band strategy number 3A. And it also includes those 7 fantastic bonuses that he puts together. And so go to westmarktrading.com/M11-Strat 2-pack, and that will take you there. We put that in the panel. That's a redirect that takes you right to Stephen's website and to his order page. So we're good to go there. So once again, great session, and it just keeps on coming. It just keeps on coming. We've got great stuff coming up. Before we get to our next speaker, it is quiz time.
All righty.
We love quiz time. I think I'm going to do it this way. So as always, first person to answer correctly is determined by our moderators. They will monitor both the chat and the Q&A channels. And then they let us know who won. You can only win once a day. So we have a couple really smart people. I don't even think they have to Google this stuff. They know the answers, but we will be awarding a $100 Amazon gift card to the person that could answer this quiz. Whose campaign slogan was, "In your heart, you know he's right"?
Oh.
Bless their hearts. I don't know. It does sound like a Southern president, doesn't it? Yep. I don't even know if we're going to need the music on this one. It was pretty quick. But
Was that cheers? That's what it sounded like.
here, what is that? Play it again.
Okay. I don't know. It was just getting kind of stuck in a little loop here.
Oh,
There we go.
was it? Okay.
Well, we
All
do
right.
have a winner, so.
All right. I will abort the song.
All right.
Boom.
All right. Who's the winner?
Let's see. Silver in the third or silver in, you know who you are. Good job. Congratulations. Let's see what the answer is. Barry
Goldwater.
1964
1964 campaign versus Lyndon Johnson. I actually got it wrong.
Yeah.
I thought it was
have no
somebody
idea.
else.
I'm learning a lot today.
I know.
There we go.